Okay, guys, few days ago, we actually traded this particular asset. We traded spikes on this particular asset and we made a lot of profit from here. Okay, so this is the section which we traded. Okay, you can see right from here till this very end. Okay, and of course you're going to be amazed if you know the time frame we are using right here, and we made a lot of profit right from here. And of course, guys, so many people started asking question how I'm able to come up with such amazing signal that gives us the opportunity to trade spikes for a very long time. So I have decided to come up with a video that will explain in details how we are able to achieve that. Okay, so you too can also learn from it and start trading your spikes just like that. Okay, but before I go fully into it, in case you are joining me for the first time, I welcome you all to Qora Digital Cash. And of course, if you love the content you are getting from here, kindly give me a follow right now. Like this video and share this video with friends and family. And if you have any question at all, kindly drop your question down there in the comment section, or you reach out to me via WhatsApp. I will be there to reply, okay? And you can also join the Telegram channel so that you can pick up some free trading signals right from there. If you're not there, you are missing a lot, okay? Last week, from Sunday last week till Saturday last week, we won our trading activities back to back throughout last week, except for a particular trade that we dropped on Saturday. Okay, that even immediately it activated the entry point. It went back to stop loss and of course took us out of the trade. Okay, so that's so amazing. But as you can see, we were able to make it back to back on daily basis throughout last week, except for that one day. Okay, so now quickly let's go straight into what we are right here. So like I said, most people have been asking the question after trading the spikes for a very long time, and we made a lot of profit right from there. However, what they don't understand is most of them have the idea of catching the spike. Okay, each time they want to learn the art of trading the spike, they most of the time what usually comes to their head is that they want to catch the spike. Okay, I think I'm not on that level again. I don't really I'll try to catch the spike because it's waste of time if you try to catch the spike. No matter the strategy you are using, um, once the market goes against you or you have a wrong entry, you get bounced in a big way. Okay, so don't try to catch the spikes. That's just like gambling. Okay, so what you should try to do is to learn to trade the spikes. Okay, is to learn to trade the spikes, and I'm going to give you a full details of how you can go about it. First of all, before coming to the chart, let's get back to this part, okay, where I will be sharing with you the best trading strategy for spikes, okay. But before we can master this strategy, there are a few things we need to understand, okay. We need to understand each of these assets and know when to go into it and trade it, okay. So there are two major assets that you can actually trade spikes on, okay, and they are the the gain X and the pain X. Okay, the gain X and the pain X. Okay, these are the two major assets you can trade spikes on, gain X and the pain X. Okay, so you need to know when to trade spikes on gain X and when to trade spikes on pain X. Okay, the right time to trade spikes on gain X is different from when you should trade it on pain X. Okay, so you need to understand this. You need to know how each of these assets works. There are other other assets under this category. Okay, so we have GainX 1200, we have GainX 999, we have GainX 500 and the likes. Okay, so we also have the same thing with PainX also. Okay, so but they all work in the same direction. Okay, the volatility level is just what differentiates each of them. Okay, so that is very, very important. Okay, now let's see how we can get the best out of this. Like I said, you need to know the best time to trade spikes on that GainX, and you also need to know the best time to trade spikes on that PainX. How do you come across? I mean, how do you get to know that? Okay, so quickly, let's go back to the chart. If you are trading spikes under GainX, okay, you it should be when the market is on uptrend. Okay, it should be when the market is on uptrend. That is when you can trade spikes, because spikes will only happen at the support region. Okay, it will only happen at the support region under gain X. But if it is pain X, spikes will happen at the resistance region. Okay, it will happen at the resistance region. That is why it is important for you to know the support zone, the resistance zones. Okay, so for gain X, it is the support zones. Okay, for gain X, spikes will happen at the support zones. Okay, then for pain X, spikes will only happen at the resistance zones. Okay, so this is very, very important. Okay, so and of course guys, does that mean that at every support zone you should place an order for spikes under gain X, and at every resistance zone you should place an order for pain for spikes under pain X? No, if you're doing that, you're going to get it wrong, and you are most likely to lose out on all your money if you follow that. And that is where those that are catching spikes are getting it wrong. Okay, so this is very, very important. I want you to listen to this carefully, so that you will have a better understanding of what I'm trying to explain right here. Okay, so for instance, let me go back to the charts. Okay, if um pain X is on uptrend like this. Okay, you can see we have more of a buying candles than a selling candle, which means you are most likely to lose your money if you decide to catch spike or trade spikes within this region. Okay, you can see it right here. Check it out. This is 15-minute candles. You can see this is on uptrend. This is PNX 1200. You can see for like how many candles? Let me see. Um sorry, let me see this. Let's calculate the candles. Okay, for about 11-15 minute candles. Okay, no major spikes happen around here. 11-15 minute candles, no major spikes happen around there. You can imagine you trying to catch spikes within this region. Okay, it means that you're going to lose out on all your money. Okay, so the same thing is also applicable to gain X. Okay, if the gain X is on downtrend, okay, and you decide to catch spikes within this region, you are most likely to lose out on all your money at this point. Okay, so this is very, very important. So that is why you should know the best trend to trade your spikes for each of the assets. Okay, so in this situation, you trade for gain X, you trade spikes when the market is on uptrend. When the market is on uptrend, okay? And for pain X, you trade spike when the market is on downtrend. It is as easy as that. If you know this, you give yourself peace of mind. Okay, if you know this, you give yourself peace of mind. So for pain X, it is when the market is on downtrend, while for gain X, it is when the market is on uptrend. Okay. And of course, you can also learn how to draw your trend line to confirm when there is a retracement, when it has gotten to the support zone or the resistance zone, or probably when there is a breakout. Okay, so the trend line can help you to do some confirmations like that. Okay, now let's go back to the chart and check this out together. Okay, be doing this together right here. Okay, so this is Gainx 999. I love using 15 minutes time frame. If we should notice, it got to the resistance zone at this point and it sold from there. And we can only trade spikes in GainX when the market is going on uptrend or is already on uptrend, and it must be from the support region. At this point, it has gotten to the support region. Okay, so even if you place your order here, you will make some good money. You can imagine all these candles are 15 minutes candles. You trading spikes between here to here alone will give you a lot of money, because these are 15 minute candles and you can do your calculation. This is 29 candles. Okay, it pulled back again and got back to that same support zone. What happened? Since it didn't break out from there, it went back on uptrend again. Okay, and of course, if you should notice, this also gave us another it gave us an uptrend signal, which is the yellow color. Okay, that is the uptrend signal. It changed from red to yellow color, gave us a buy signal at this point, which means you can come in and place your order around here, or probably if you miss that, you can do it around here. But let's say we decide to place our order somewhere here, and you put your stop loss at the support region. All you just need to do is just to stay tight and relax. Okay, so by the time the market actually got to somewhere here, okay, where we had another pullback, it gave us another buy order. Remember, this your first order will have been in profit. Even if you want to close it at that point, you will have made a lot of profit at that point. But let's say you don't want to close it because the trend is just starting. Okay, so you decide to place another order at this point, and these spikes happen and more spikes happen. You can see at this particular spot, we started from here, and at this particular spot you will have been in a lot of profit. Both orders will have been in profit. Okay, so it kept going up and up, and this will have given you a lot of profit at this point. Okay, and at that point, let's say the price action has gotten to somewhere here. At this point, I don't expect your stop loss to still be here. And for each of these order, okay, we have two different orders around here. Okay, for each of them, make sure you set stop loss for each of them. So I don't expect your two stop loss to still be here. Adjust your stop loss to lock up a major part of the profits. Okay, to lock up a major part of the profit, at least up to 80%. If not 80%, at least you should lock up 70% of the profit at that particular point, because you've made a lot of profits already. Okay, so if you apply this strategy, you will always be in profit. Okay, remember, this is already approaching a resistance zone at this point, and we don't know if it's going to break out from there. Okay, it is after it had happened, that is why we knew that it's broke out from this particular resistance zone. But at the beginning, we don't know if it will break out from here. So you can do two things at this point. You can either close your trade immediately it gets to the resistance zone, that is this point. You can close all your trade, or probably you make use of your stop loss to lock up some parts of the profit. Okay, you can lock up 80% of the profit at this point. You have nothing to lose. Okay, so if it comes back and gets to your stop loss, it will only take 20% out of the profits you have made already. You can imagine your profit from here to here will be in your wallet directly. Okay, we go straight to your wallet directly. That's how sweet this strategy is. But luckily for us, this actually broke out from there and gave us more trading opportunity. We know when there is a breakout, it means that it will go in that direction for a very long time. So I expect you to lock up more profit at this point as it is going up till it got to the next resistance zone, okay, which is this. And of course, like I said, you can either close everything up at that point or probably you adjust all your stop loss at this point. Remember, it is possible for you to add more order in between these, okay? But just because the indicator didn't give us more order does not mean you cannot add more if you want, okay? And if the indicator had given us more order, then you should have followed. I mean, you can follow the indicator, and that will also depend on what you are having as your trading capital, okay? So this is very, very important, okay? You can decide to go the way you want whenever you are trading, okay? So this is very, very important. So at this point, I expect you to lock up more of the profits, okay? So this time around, you can see I'm locking up more. I adjusted the stop loss to somewhere here, and of course the profit from here to here will be there, okay, locked up for me, okay? At this in this part of situation, okay, with this situation, you can see it didn't break out above this resistance zone again. It changed from an uptrend into a downtrend, okay? And it came down and it got to the stop loss, even below the stop loss. But immediately it got to the stop loss, you would have been taken out of the market. So you can imagine you trading your spikes right from here till this very moment with two different orders. What if you had actually um created more orders at that particular point? That means you would have been in more profit like that. Even with a single order would have given you a lot of profit. The reason is this is 15 minutes time frame, and you can imagine the amount of profit you would have made with this, okay? Let's calculate the candles together. So this is 65 candles, 65 15-minute candles. That's so amazing, guys. That's so amazing. And that is about 115,892 points. Okay. So this is a lot of profit already. So that is how we were able to make this amount of profit when we traded this particular section of this asset. Okay. So congratulations to those of you that actually follow this signal then, okay? Congratulations to you all. So this is how I was able to generate the signals, okay? So you too can also practice on your own. Just follow the instructions given in this video. If you didn't get it at a go back to watch the video over and over so that you will get, I mean, the full gist about it. And if you are having the same setup, the same training tool I am using right here, it will even make it very easy for you to achieve it more, okay? So I will be stopping right here. Remember to give me a follow right now, like this video and share this video with friends and family. And if you have any question at all, you can also drop your question down there in the comment section, or you reach out to me via WhatsApp. Watch out for my next video. Until then, God bless.